Internal Revenue Service IRS tax news. Helpful information for taxpayers on backup withholding. IRS Tax Tip 2020-136, October 14, 2020. Taxpayers who receive certain types of income may have backup withholding deducted from these payments. Backup withholding, there's a link to backup withholding here, can apply to most payments reported on certain forms 1099 and W-2G. Here are some facts to help taxpayers understand backup withholdings. So notice the general rule with a 1099 and W-2G, remember, of course, is that if you are paying somebody else, if they're an employee, then of course you got to report the W-2 income to the employee, and the IRS, of course, also wants it reported to them. So the one W-2 form goes to the IRS, and then of course you would be subject to withholdings for the employee, withholdings on that. Now, if you have some other type of payment, then you often will have a 1099. So what is a 1099? The IRS is basically saying, hey, look, I know that they're not an employee, but the payment that you are making to this other person is income to them, and we would like to basically follow up on that. So the tax law basically means that the individual is, of course, required to report their own taxes, but the IRS has leverage to force someone to show that they're reporting income applied to somebody else on the person who's paying, because the person who is paying is going to want the deduction. So the IRS basically says with a 1099, what a 1099 typically will mean is they're saying, hey, look, do you want the deduction for this item that you're paying to somebody else? If you do, then make sure that you 1099 them and give us a copy of it so that we know that they got paid, so that we can follow up and make sure that they're reporting it on income on their side, so that we can make sure that we're collecting the taxes on the income side of things. So that's going to be a typical kind of 1099 type of situation. Now, 1099s, you don't typically need to withhold on the 1099 like you do with a W-2 type of income. It's just a reporting requirement. However, in certain situations, such as a situation where possibly there's not a valid EIN number or tax identification number or something like that, the IRS is going to say, we would like you to withhold on that information because, for example, if someone doesn't provide a tax identification number and you 1099 them, the IRS still doesn't know who they are, so they can't really follow up on that income. So in that situation, that's one example where the IRS might then say, well, I would like you to then withhold some money as you pay them the money, so that we can guarantee, or we can make sure that we have our hands on the money that's going to them, because as it goes to them, it would be income and therefore taxable, and we should get a portion of it. That's going to be the basic kind of layout of the 1099s, and the W-2 are just one way to kind of visualize what's going on here. So now let's go back to the text. Here are some facts to help taxpayers understand backup withholding. Backup withholding is required on certain non-payroll amounts when certain conditions apply. The payer making such payments to the payee doesn't generally withhold taxes, and the payee report and pay taxes on this income when they file their federal tax returns. So if you're not a W-2 employee of somebody else and they just pay you, that's normal, just process of business paying from one company or one individual, one entity to another. The person that receives the income under normal conditions has the requirement under the tax code to report that income and pay their taxes. But again, the IRS might then say, I would like to go to the person paying and get information from the payer, because I have more leverage on the payer to kind of force them to tell me the amount that was paid to the payee, so that I can double check and verify that the payee is reporting their taxes properly, and that I'm getting paid as the IRS on that money. That would be the 1099. However, typically under that condition, that would just be a reporting requirement and not a withholding requirement as you would have with a W-2 withholding, unless certain conditions apply. So there are, however, situations when the payer is required to withhold a certain percentage of tax to make sure the IRS receives the tax due on this income. Backup withholding is set at a specific percent. So if you're subject to the backup withholding, it's going to be a set kind of percent. So in other words, you're not looking at like in a W-2 wages, of course, you look at the tables and you try to figure out, what's going to be the progressive tax rate for this individual. With backup withholdings, you don't have the information. You don't have the W-4. You don't know exactly how much tax the individual will owe Therefore, the IRS just comes up with a number, a flat number here. So if you're subject to backup withholdings, then you got to withhold this percentage amount typically. The current percent is 24%. Payments subject to backup withholding include interest payments, dividends, payment card and third-party network transactions, patronage dividends, but only if at least half the payment is in money, rents, profits, or other gains, commissions, fees, and other payments for work done on independent contractor, payment by brokers, barter exchanges, payments by fishing boat operators, but only the part that is paid in actual money and that represents a share of the proceeds of the catch, royalty payments, gambling winnings, if not subject to gambling withholding, taxable grants, agriculture payments. Examples when the taxpayer must deduct backup withholdings: if a payee has not provided the taxpayer a taxpayer identification number, a TIN specifically identifies the payee. TINs include social security number, employer identification numbers, individual taxpayer identification number, and adoption taxpayer identification number. So that would be a typical kind of example. So a scenario you might think, you're saying, okay, I'm hiring a contractor. The contractor's not a corporation. They're sole proprietorship. So typically then the IRS says, well, if you're going to pay the contractor, then, and it's over a certain amount that's pretty low, then we want you to report. We want you to tell us that you have given them income so that we could follow up with them to make sure that they have reported their income. So you would have to then 1099 them. And the IRS has leverage on you, the payer, to force you to 1099 them and tell the IRS that you have given them income because you want the deduction, right? You want the deduction. So the IRS has the leverage to try to get you to do the added reporting in order to take the deduction, whereas the other person receiving the income has to report the income as income, which is like a bad thing. So, right, they have an incentive not to want to do that, and you have the incentive to want to take the deduction, right? So then you're going to report the 1099 income, but if you don't have the TIN number, like a social security number for the contractor and whatnot, then the 1099 income doesn't do anything. I mean, you could still give it to the employee or to the contractor and tell them how much they have earned, but that's not really what the government cares about. The IRS doesn't care about you giving it to them. They want the information on their side, right? And to the IRS, they can't follow up on it. They can't follow up to make sure that the contractor pays their taxes because they only have a name and not a TIN number, and the IRS sees people as a number, so they won't be able to follow up on the taxes. So in that situation, you can see why the IRS would then say, okay, well, we want you to actually withhold the money from them, kind of like they were a W-2 employee, and give us the money directly, 25%, because I don't know how much these people, I don't know what their tax rate will be, so we'll just take 25% of them and give it to us, just to kind of verify that that we will that we will get paid in that situation because we can't follow up on the TIN number. So that's one kind of scenario where you can kind of visualize how this thing might pan out. So in any case, if the IRS notified the payer that the payee provided an incorrect TIN, that is, the TIN does not match the name on the IRS records, payees should make sure that the payer has the correct name and TIN to avoid backup withholding. So if they got the incorrect TIN, again, same situation, the IRS is going, hey, I can't follow up on this. We want money now then, because I can't follow up and double check that the income's being paid. So more information, backup withholding B program, there's a link to that here. Publication 1281, backup withholding for missing and incorrect name TINs. There's a link to that here as well. There'll be a link to this in the description.